Hey, good morning, everyone. Welcome to the Finance Auditing Committee of Thursday, January 22nd, 2026. I'd like to call the meeting to order, and if we could have a roll call to confirm, please.
Thank you. Good morning again, everyone. Starting with Director Devlin.
Here.
Giudice is absent. Hernandez. Here. Maston is absent. Rodoni.
Present.
Vice Chair Parr. Present. Chair Rabbit.
Here.
And President Cochran.
Here.
Thank you. You're not a committee of full, but you do have a quorum. We also in the room have Directors Garbarino, Hill, and Snyder. If another director joins us, we will become a committee of the whole, but for the time being,
we're so close. We appreciate everyone being here. Thank you very much, and look forward to presentations and discussions. First off, item number 3, which is the ratification of previous actions of the Auditor Controller. And Monique is not here today with us, but we do have Justin Usuelo. Justin, welcome. I think Justin's report starts on pages, this report starts on page 7 of the packet.
Great. Thank you, Chair Rabbit. My name is Justin Usuelo. I'm with PFMS Management. I represent the investment manager for the district. I'm a direct report of Monique Spike, who's my manager. I'm frankly delighted to be here with you all today. I grew up in Bernal Heights, so I'm born and raised here in the city, and just so delighted to continue serving the place I hold near and dear to my heart. So thank you for having me. So I'll begin my remarks on page 10 of the packet. You'll see here the Treasury yield curve update, and I'll reserve a lot of my remarks surrounding key rates when we discuss page 14, where you'll see the entirety of yields. For now, I'd really like to bring everyone up to speed on the macroeconomic developments that we've seen, frankly, over the past several weeks and weekends. That's driving a lot of the volatility, a lot of, frankly, I think, the noise that we carefully navigate as we manage the district's corpus. First, the FOMC chair. Catalyst for increased volatility we saw began last Friday when President Trump suggested that Kevin Hassett would not be in the running for the FOMC chair position. And then certainly things were compounded by additional information that we saw over the weekend. We saw additional information surrounding Venezuela and Greenland, and the market continues to be very concerned about the administration's continued push to take over these countries, which has triggered a global risk-off behavior. Equities essentially have been down, yields have been rising, and we've seen a surge in risk haven assets like gold, silver, and continued volatility. Yesterday at President Trump's speech in Davos, he mentioned that he would not use force and will push for a negotiated agreement on Greenland. That has eased some fears, and rates are now essentially down about 3 basis points across the curve, which frankly will help the district's portfolio. Other items that we see, Lisa Cook, with respect to the Supreme Court hearing surrounding her position, Chair Powell was in attendance, and no decision has been made at this time, but there is still overwhelming concern about the potential removal of Cook, because we believe that if the Supreme Court rules against her firing, this should be good news for the market, signaling that the Fed should continue its independence. And then lastly, internationally, in Japan, we saw a very weak 20-year auction that has brought their long bonds about 35 basis points cheaper, but that has dragged U.S. rates higher. So that also poses some challenges as we carefully manage the portfolio. I want to dig now into just key data. So the Fed primarily looked to inflation and unemployment as they manage their target rate. So page 11 begins that discussion on inflation. And here you can see, well, perhaps I should rewind to the beginning of last year. Everyone expected inflation to be much higher than perhaps where it is now. We haven't yet seen that. As we look to even lagged data with the government shutdown, inflation still remains core and headline consumer price index seen here for November are at 2.6 and 2.7%. So, that said, I don't think the Fed is really leaning on this sort of information to predict how it may move rates. I'll turn later to employment, where they've signaled, frankly, that's really the data they're relying upon to guide where they want to bring their key Fed funds rate. Page 12 speaks to the K-shaped economy. So inflation and unemployment are part of the Fed's dual mandate, and ultimately that drives U.S. gross domestic product. But one thing we wanted to highlight, as it's been mentioned in the news quite a bit, is the K-shaped economy. So what is that? On the top half of this slide, you can see the lowest quartile wage earners in blue, followed by the highest quartile wage earners in green. During the pandemic, post-pandemic, many folks all enjoyed growth in their wages all the way up through, call it 2020 through first half of 2023. That has come down. But you can see that more recently, the highest quartile wage earners, their wage declines have actually kind of plateaued. And the declines in the lower quartile wage earners has declined beyond those of their higher counterparts. So that is what is the K-shaped economy, right? Folks that have more resources are able to still spend more, and that's the top part of the K, whereas folks that have less money are spending less. And that's what we're seeing. And this is very illustrative on this top part of the page. GDP, in the U.S., most of our economic growth is driven by the consumer. Approximately 70% of that accounts for the majority of our economic growth. And as usual, you can see on the bottom half of this page, personal consumption by the dark blue bars, those dragged at the beginning of the calendar year. Think after holiday spending, not many folks are buying gifts in January and February, unless perhaps your birthday is in January or February. But we saw a lot of that offset, interestingly, this year by net exports. So folks were anticipating perhaps there would be tariff announcements that we heard during the election cycle, and many folks brought in goods illustrated by these green bars. In Q1, those were net detractors to U.S. GDP growth. That was a drag on the economy. As we move through the year, Q2, Q3, that continues to be positive and driving growth in the U.S. economy. So we'll continue to monitor this closely. One special note, I would say, you'll see here 4.3% growth in U.S. GDP for the third quarter. As of this morning, that was revised upward to 4.4%, which is, again, good positive news showing continued resilience. Page 13 speaks to the labor market. And I think this is really where the Fed continues to hang its hat surrounding where they want to take the target Fed funds rate. For over, call it 2 years, from February 2022 to May of 2024, we saw unemployment below 2%, or pardon me, below 4%. We're now well above 4% and have been sustained for several quarters now. But I think the real concern in what the Fed, like I said, continues to hang its hat on is this decline in growth in non-farm payroll. So you can see, positive numbers up through the third quarter, and most economists generally anticipate 150,000 in new jobs, signaling robust, solid growth in the U.S. labor force. Certainly, there are things like AI, efficiencies, pressure perhaps to continue maintaining for-profit margins and profitability among those companies. But you now see negative non-farm payroll growth in the fourth quarter, 67,000 jobs lost, according to this chart. So, we'll continue to monitor this closely. We think this is really where the Fed guides. This is what guides the Fed as it moves its target rate. But a particular note is the exhibit at the bottom of page 13. And Monique specifically let me know that the board asked for this information. We wanted to shed some light on the correlation between the Fed funds rate and the job market. Historically, we see the Fed cut rates in response to exogenous shocks that would indirectly impact the labor market, not in response to the labor market. So the question was asked if there was really anything to show that might illustrate this. So we pulled back data all the way through 1995, and you can observe the shocks in each of these periods. 2000 to 2001, we saw the dot bubble and the 9/11 terrorist attacks. 2007 to 2009, we see the Great Financial Crisis and Great Recession, and then in 2020 we had COVID. So you can see here the correlations that you all have asked about, and perhaps how they might be tied. You know, in our view, the Fed cuts are really just, again, in response to the shocks. They're not really driven and a direct response to labor markets themselves. We hope this information is helpful. And I guess I should just pause here to see if there are any questions before I dive into the key rates and then the portfolio itself.
Yeah, looking to my colleagues, any questions for Justin? No, why don't you continue on, Justin?
Okay, great. Thanks so much, Sharad. So I mentioned at the beginning of the conversation, I wanted to hold my comments regarding the Treasury yield curve to page 14 here. You can see how Treasury yields have moved since November in the dashed line to November in the solid line. The full year is indicated by the shaded area on this page. You know, since the end of the year, yields have been up, as I mentioned, all of the sort of noise and news and developments that we've seen since the beginning of the calendar year. That said, we think the portfolio still continues to perform quite well relative to the two-year index, which at year end was 3.47%. As of this morning, it is 3.616. I tell many of my clients, you know, if you want to keep a pulse on the performance of the district's portfolio, keep the two-year Treasury yields on your phone as a widget. I think that's an important metric for you all to continue monitoring as we manage the district's corpus. On page 15, this speaks to the broader economy and perhaps equities. The 2-10s part of the curve, as I mentioned earlier, you know, that is now, or as I showed earlier, those are showing steepening since 2022. And while equities were down, gold is in fact up. Gold has increased about $300 an ounce over the past week. And the S&P, you can see here, shows remarkable gains over the past calendar year, up almost 18%. But with all the news that I mentioned at the beginning of my remarks, the rolling year, the S&P is now up only 13%. So we've lost, you know, call it 4+% over the past 3 weeks, which is really remarkable considering all of this sort of volatility driven by the macroeconomic environment we're in. Page 16 of the packet speaks now to the portfolio itself, and it has been a very busy week so far, and the market still seems a bit complacent when looking at risk assets, including corporates, asset-backed, mortgage-backed securities, other fixed income assets outside of treasuries. So spreads across all of those sectors that we hold in the district portfolios still remain anchored and pretty well supported. Continue to see ample liquidity in treasuries. The dollar continues to be the main reserve currency for the world. So we're not so concerned with perhaps things that we've seen in prior financial crises. So we are continuing to be mindful of Q1 expenses related to the seismic payments of the district, and our long-term view of lower rates still remains. We are taking opportunities currently to lock in the prevailing higher rates that we can continue to see while they last to drive continued income. Page 17 speaks to the outlook, and I'm not going to, you know, read here what's on the page. I think there's a lot of good information, but I think what I should say is, with respect to the district's investments that we steward, the path for the Fed has not changed so much with respect to its Fed funds target rate. While they are currently in a blackout period and they haven't been able to say much, the Fed is expected to meet on Wednesday, and we don't anticipate any rate cut at this point in time. Many participants don't, and in fact, 95% expect no cut as of this morning for Wednesday's meeting. The expectation is that 42% expect a chance of the first rate cut in June of this year, and perhaps 2 25 basis point rate cuts is PFM's base case for rate cuts this year. Finally, just digging into the portfolio itself, page 18 shows some key statistics that illustrate our management of the portfolio in accordance with the investment policy and state code. While U.S. Treasuries continue to account for the majority of the investments, single issuers we purchase for the district do not exceed 2% of the district portfolio. Maturities, you can see on the lower left of the page, offer ample liquidity to the district with 19% of the holdings available overnight and 37% of holdings maturing all within the next year. Last, I'm delighted to report that portfolio yield at 12/31 was 3.94%, well above the 2-year Treasury benchmark yield of 3.47, and at 12/31. And as of this morning, as I mentioned, it was 3.616. So the portfolio is performing really well, continuing to maintain that safety and liquidity that's required of the policy. And I'll pause here now to see if there are any questions that we can answer. So thank you. Sure.
Thank you. Again, looking to my colleagues, any questions on anything that you've heard? Seeing none, that's because you did such a wonderful job of going through that. Thank you. Thank you for being here. Thank you for specifically addressing on that one chart on page 13, that correlation between the rates and where the Fed funds react to, and it gets very, very interesting. And yeah, strange times out there. I'm not sure if we have anything invested in Greenland, but you know, who would have thunk talking about these things? But thank you for all the work. Appreciate it.
Thank you very much. I'll pass the word on to Monique. Thank you.
Yeah. With that, this is a ratification of previous actions by the auditor controller. I'll quickly ask if there's no more public or committee comment. Is there any public comment?
We have no speakers for this item.
And with that, I'll look for a motion to accept the ratified report.
Move this item. Second.
We have a motion and a second, and let's vote.
Roll
call.
Yeah. Roll call vote, starting with Director Devlin.
Aye.
Judici is absent. Hernandez. Aye. Matheson is absent. Rodoni.
Aye.
Vice Chair Park.
Aye.
Chair Rabbit.
Aye.
And President Cochran.
Aye.
Thank you. That's unanimous. So those present.
Great, thank you very much. Moving on to item 4A, which is what we just heard in the Building and Operations Committee. The budget increase for fiscal year 25-26 Ferry Division capital budget for project 2443, the San Francisco Ferry Terminal West and East Berth Rehabilitation. And I'll look to my colleagues if there's any questions on the financial aspects of that particular project. Seeing none, look to the public if there's any public comment.
No public comment for this item.
No public comment, and I'll look for a motion to approve.
So moved.
Second.
Second.
We have a motion and a second. Can we please have a roll call vote on that?
Thank you. Voting on item 4A, and that's starting with Director Devlin.
Aye.
Judici is absent. Hernandez. Aye. Matheson is absent. Rodoni.
Aye.
Vice Chair Park.
Aye.
Chair Rabbit.
Aye.
And President Cochran.
Aye.
Thank you. That's unanimous.
Great. Moving on then to item number 6, which is to authorize the execution of on-call contracts relative to the request for proposals 2025 D115 on-call grant and project support services. Jennifer.
Good morning. Happy New Year, all. I am here before you to ask authorization to have 2 on-call contracts as a result of our RFP for on-call contracts relative to 2025-D-115. This really is what we call our bench contracts for on-call service. Our grants department, is very busy trying to get us grant applications, doing grant administration, doing some research. We currently have a bench, but this really, we refreshed this RFP. We want to expand the scope a little bit. So it'll include a little bit more support in our capital asset, our TAM as we call it, as well as some strategy about grants. So we just opened up the scope a little bit. We would like to award it to HDR Engineering as well as WSP USA. They both have these branches of grant experts as it relates to both the state and the federal. So I'm here to see if we can refresh this on-call bench. Happy to answer any questions if you have them.
And I'll look to my colleagues. Any questions? I have a quick question regarding, so obviously it'd be interesting to see the trend of the on-call contracts, what
Yes.
actually we authorize then versus what the
track it.
actual is. And then is it true that are we appropriating the $1,500,000 or are we just up to that amount?
It's the authorization amount, so we only use it if we have budget, and only use it if we need it. What we do is once you award these contracts, we dole them out in the form of a task order. So the contracts we have, basically, you do it often in ferry for emergencies. This just allows us, to me, the grant cycles are not even seasonal, they just come up and we need to have kind of a little bit more robust technical support. So we call on them, we do a task order, if they're not for anywhere near $1.5 million. This is grants it up to, and I think it's a 3-year with 2 additional 1 terms. So it's $1.5 million over the possible 5-year.
Is there a fund balance that remains in a line item for the specific use going forward, or does it revert back into the general fund?
It's actually different in terms of we don't accrue this, I guess is a better way of saying it. You know, most of our service contracts, if they're going to be something like a service like janitorial or whatever, we accrue. We basically say, here's a service agreement. We set that money aside because we know we're going to be paying those fixed agreements. These are basically to have on hand so that you don't have to go out for an RFP or a bid in situations that are usually short turnarounds. As well.
I'll give you an example. You know, the DOT will drop a notice of funding opportunity with a deadline of February 24th, and you didn't know it was coming. And so they'll reach out to the consultant, and there's no money encumbered at this juncture. It's just authorized. But if you approve this, since it's authorized, if we have money in the budget, we'll negotiate a task order, and they'll assist our grant staff in putting together the package so we compete. But the money's not encumbered, if you wish, until such time as we have an actual task order where we need to use the services. So it doesn't tie up money.
Yeah, I'm all for making sure that you have the flexibility needed. I'll be honest, my bias, and I see this, I'm not sure if you do, Dennis, at your county, but sometimes you do appropriate these dollars to a specific department for on-call contracts, and then they get carried over, and the next thing you know, there's a line item of many millions of dollars for on-call contracts that is kind of regurgitating.
Right. Yeah, these actually don't show up in the budget. You have them in many of your administration areas, and you have them in IS and task orders. So I will tell you from the finance side and the procurement side, we've watched them staff would say right now, we're really watching them closely. So there's a whole process to get it signed off to make sure that it's good use of our funds and it's necessary. So Dennis and I both have to agree on the scope to make sure. So this
I appreciate that, and I'm sure I speak for all my colleagues here that thank you. Thank you for being having that fiscal discipline. Is there any other questions for my colleagues? Seeing that, is there any public comment?
We have no public comment for this item.
And I'll look to my colleagues for a motion to approve the execution of these on-call contracts. Motion and a
Second.
we have a motion and a second. With that, a roll call vote.
Thank you. Motion is second for item number 6, starting with Director Devlin.
Aye.
Giudice is absent. Hernandez. Aye. Massa is absent. Rodoni.
Aye.
Vice Chair Parr.
Aye.
Chair Fahmy.
Aye.
And President Cochran.
Aye.
Motion passes. Thank you.
Great.
Thank you.
Thank you. Moving on to item number 7, receive the independent auditor's single audit report for the year ending June 30th, 2025, as submitted by Eide Bailey LLP. We have Cody Smith to make that presentation. I know that we have Ahmad here as well from Eide Bailey. Cody, good to see you. Thank you very much.
Yes, thank you for having me again, Director Rabbit, members of the board. I'm going to introduce Ahmad again, who's here from Eide Bailey, to do more of the formal report, go over just some high-level introduction from my piece. This is the single audit is the audit of the federal grant awards that the district is awarded. It's obviously a very important piece for the audit season. We used to couple it with the ACFR, that's the Annual Comprehensive Financial Report. The reason why we uncoupled it a few years ago is the fact that the compliance supplement, and that's the federal guidelines for the audit, is being released later and later. This year it was released actually about around Thanksgiving time. So the reason we want to get the audit done, the financial statement audit done as soon as possible and meet all the deadlines associated with that. And then we need a single audit thereafter. And so that's why we have uncoupled the two. And we expect that to continue. Just as an FYI, the financial statement, external financial statement audit, all the requirements are due December 31st. And the single audit requirements are all due March 31st. So we're in no position to meet any of our deadlines or any type of filing submissions for that. So we're still above board with all of those as well. And last but not least, I also just want to, of course, give a shout out to my accounting team. They do a wonderful job. None of them are here today. There were last ones because they're busy working. So we have a full house downstairs, but they're all working right now. So I just want to give them a shout out. Also, just a quick shout out to the capital grants team. Jennifer's last piece is a good segue. We work very hand in hand with them with this audit. So I just want to also recognize their work and help with this as well. So with that, thank you.
Thank you, Cody. Thank you, Cody. Good morning. This is the single audit report in accordance with the uniform guidance. They're a bit different than the audit of the financial statements of the district. This one is a compliance audit. Scope of the audit is to ensure that you expended the funds in accordance with the grant requirements. And those are federal grant requirements, so there's specific strict requirements, I'm going to say, with respect to contracting, with respect to labor compliance, with respect to, accounting and the internal controls related to those federal programs. And what we do is you receive two major sources of funding. One is the 5307, which is from the Federal Transit Administration, and the other one is from the Department of Highway, the Federal Highway Planning and Construction Program, and we rotate them year after the other. Last year we audited the 5307, which is the FTA cluster, and this year we audited the Highway Planning and Construction, which is mainly the suicide deterrent program. And again, we looked at the charges to that program, ensured that they are in compliance with that grant requirements, contracting, bidding, competitiveness, been charging those programs with the appropriate charges. That's what we looked at, and I'm pleased to let you know that we issued a clean opinion on federal compliance of the district. And with that, I'd be more than happy to take any questions. We can thank you for your work as well, and I'll look to my colleagues if they have questions. I was just looking at the spreadsheet of the total number of federal grants, and I was appreciative to see, and it tallies up to over $64 billion, actually closer to $65 million. So wonderful. Special note of the ambassador program, the $211 expenditure. Not sure what that was, but we're appreciative of that. Again, looking for my colleagues. Any questions? Maude, thank you very much. Is there any public comment on this particular?
We have no public comment on this item.
And with that, I'll look for a motion to receive the independent auditor's single audit report.
So moved.
We have a motion and a second, and a roll call, please.
Thank you. Voting on item number 7, starting with Director Devlin.
Aye.
Giudice is absent. Hernandez. Maston is absent. Verdoni.
Aye.
Vice Chair Parr. Aye. Chair Rabbit.
Aye.
And President Cochran.
Aye.
Thank you. Motion passes.
Thank you so much. Thanks for the work. And back to Jennifer with status report on the fiscal year 25-26 budget. This is item number 8 on pages 47 to 56.
Right, good morning again. Because of the schedules and the holidays, we're having both November and December monthlies. We just combined, so as we go through some of these, I'm probably just going to refer to the December as it's our latest close, but they have the November numbers in here. I want to make sure they were here. So for item 8, as you know, this is our status report on the budget. If you turn to page 50, it's usually the table that I'll look at. And again, as a reminder, this shows us that we really started out with a $58.2 million deficit without that one-time funding from SB 125. If you add that funding in there, we're down to a $23.7 million shortfall. And then as of December, we are actually in the black. I had to relook at that a couple of times to make sure that the parentheses are right because it's a Word document. And what that really means, as we were saying, we really have the fiscal discipline to really cut back on the actual spending. But you will hear the broken record as I go through the next ones that we are going into the winter season. And as you know, that's usually where just weather and days, well, our ridership and traffic may dip a little bit. So you're not going to see as much of a trend on your revenue side as it relates to your expenses. So with that, though, that's good news. Even without taking out the market gains, you are $2 million in the black right now. Happy to answer any questions on the status report.
That's after spending one-time grant funds that we won't receive any more of.
Correct. Keeping us afloat.
Looks good, though.
It looks great.
Any other questions for Jennifer on that? Why don't you just,
Okay, item 9. So this is your monthly report on traffic and tolls. If you turn to page 59, as you know, I use this table to show the graphs, and you can see we are doing well as we go into November and December. If you look at bridge traffic, it looked actually pretty good in December. We always look at the calendar and look at the weather. As you know, we had those big storms first week in January. So when you see January's numbers, you're going to probably start seeing these dips, just weather. People aren't out and about as much, not as many activities in the city. For bus, you can see actually what I was looking at was as you go from October to the third column over in actuals. If you go in the third column, you'll see the summer ridership as we go into November and December. So while it's good and it's stable and it's up from last year, that is an indication that we still are seasonal, just weather, holidays, and so you'll start seeing that flatten out, and we expect hopefully in the spring it'll rebound back where it normally does for spring and summer. Same thing for ferry. Ferry's kind of bopping around, and I do think a lot of that is weather dependent for ferry that's happened in the last couple of months. But I'm sure you'll hear the general manager report for year over year. They are actually trending up almost 9%, I think is. Yeah, so they're trending up from 2004. So we're happy to see that all across the mode. So for me, that's good news. We're stable. We're kind of in a back seasonal pattern that we're used to seeing for our riders and our traffic. Happy to answer any questions on item 9.
any questions? Seeing none, we'll take public comment all at once. Move on, but go ahead.
All right, 10A, and this is what I always call the cash flow report. First page shows you November on page 65. If you turn to page 66, it kind of shows you the balance on page 66 for December, which is our latest close. And again, good news right now that cash flow is in there because we have that $34.6 million from that SB 125 in our actual bank account. So as that goes through the year, you'll probably see that number come down because we'll be spending expenses as it relates to kind of the revenues that are coming in on a monthly basis. Questions on 10A?
Keep going.
All right, 10B. So 10B again, November and December. This is the capital program expenditures. And I would refer you to page 91 on this one. You have both November and December, so it looks like a repeat, but one is November, one is December. This is just showing you your capital spend. I got to kind of look at the agency summary on the blue line down at the bottom. We've spent $20 million this fiscal year on capital projects. I suspect with next month with Seismic's biggest check I've ever signed going out, you'll see that jump quite a bit as they do the mobilization payment. So while that's exciting, your fiscal officer is seeing it's huge. As I said, I've never written a check that long. So good news for us, it's going to be progress, but we will definitely be keeping track. And I'm glad PFM is, I think it's unprecedented for us to have to balance, as I said, we're just trying to balance our savings and checking account, when to start transferring things in, when to balance. Again, you've got the reserves for it, but we just want to manage it and keep it, interest on your savings and making sure that we keep that as solvent for as long as possible. Questions on 10B or any of the other items?
Anyone have anything for Jennifer? Thank you.
Mm-hmm.
Thank you for all the work. Thank you for all the good fiscal discipline, keeping us on track. And I'll look on these particular items, which were items 8, 9, 10A, 10B. Is there any public comment?
There's no public comment on items 8, 9, 10A, and 10B.
Great. These are informational, so no action needed. We'll move on to item number 11, which is review of the district's fiscal year 25-26 second quarterly report of judgments or settled claims. Kelly, thank you for your work.
Morning, Director. This is an information item for you for the second quarter, and it contains 11 workers' comp claims. 7 of those were full settlements, closing everything. 2 left the medical open, and 3 were stipulated. and there were 4 resolved liability cases.
I'll look to my colleagues for any questions on any of those. Once again, thank you for all the good work. Oh, we do have one question.
No, I just have a comment. You know, I listened to the workers' comp reports, Kelly. It's not one of those that just goes through. I'm always impressed at the settlement amounts. Those are really impressively low settlement amounts.
Just be glad you're not on the other side.
Yes, and I was gonna say, I know how hard it is, because when people file workers' comp claims, they go in with stars in their eyes.
Yeah,
They think they've finally come to the retirement age, you know, at whatever age it is, 26 or so. And you've done a fantastic job
Oh, thank you.
of keeping the,
Keep that in mind in closed session.
yeah, thank you. Don't bring me in.
Thank you.
Kelly, thank you so much. Appreciate the work. Is there any public comment on this particular item?
We have no public comment on this item.
Great. Back to Jennifer for item number 12, review of the auditor controller's fiscal year 25-26 second quarterly report on
Right.
authorized budget adjustments.
Now we're on quarterly report, so here we go. Item number 12 is for your budget adjustments and transfers. If you turn to page 98, you can see all the specific ones that we did in the first quarter and second quarter. They'll just keep adding on as we go, but you'll notice they're just all capital adjustments for the most part. Right sizing in most of them you have taken here at committee, so it's just our way of keeping track.
Any questions? And 13, which is the review of the auditor controller's 25-26 second quarter procurement.
Got all excited because now I think I have an answer to your question. So this is your second quarter procurement, and the purpose of this is per the board's direction that any routine procurements over $250,000 that the general manager authorizes, as well as any of the non-routine, as we call them, up to $250,000, are listed here on a quarterly basis. And while I was saying there was not that, you can take a look and have any questions. If you start looking at page 105 and you scroll through, we do it by division. Page 106 actually has a lot of the on-call contracts usage. And so this is where we report out where the general manager's authorization, the flexibility, and a lot of them are operational. So when things happen, that's when we execute these on-call contracts. And happy to answer any questions. I know that in here we have a couple of revenue settlements as well that we're putting in. We're just making sure all the other agreements and service agreements that the general manager has authority are just all in one place for a quarterly report.
Director Hernandez.
Thank you, Mr. Chair. Something just jumped out at me from page 105. It's, let's see, 1, 2, 3, 4, the fifth item down the list for bridge, 44 Glock model G47 and accessories. Is that not a firearm?
That is correct. We have armed security staff that works at the bridge, and they have licenses from the state of California, not just for a sidearm, but they're also licensed for long arms, law enforcement, assault rifles. And they have those under license from the state in order to protect the bridge. So yes, we have staff. They go through regular training. They have to annually go to the range and pass a marksman skills test. But we do have firearms for our bridge security department.
Okay, I was not aware of that. I know that our bridge forces, our dedicated bridge forces, do not carry firearms. So when I saw that,
So when you see our bridge captain, if you look at his belt, you'll see that he's wearing it. When you see our patrol officers on the sidewalk, you look at their belt. They're carrying firearms. We are an iconic structure. We've carried firearms for a long time. After September 11th, we closed the sidewalks for 2 weeks. The then governor sent the National Guard out here, and we worked with federal and state law enforcement agencies, and we had our staff certified to carry law enforcement assault rifles, something that a civilian cannot own in California. And that was at the direction of the state and federal officials in terms of our obligation to protect this bridge from nefarious actors. And so the long arm is licensed by, I think it's BIIS, Bureau of Investigative Services. Well, no, it's actually DOJ, Department of Justice. But the sidearms are Bureau of Investigative Services. as are the handcuffs and the pepper spray. So each individual has to have their own licenses, individuals go through certifications. But yes, our security department does carry a sidearm with them, and we have shotguns and we have law enforcement assault rifles that our team has access to. There are things that we hope we never have to use. In the 25 years I've been here, we've only once had one of our patrol officers take a firearm out of the holster. It was an incident where someone robbed at gunpoint our toll lane when we had toll collectors, and the person driving off shot the toll collector, even though she gave him the cash drawer. And one of our sergeants ran out, and they fired a shot, and they disabled the individual that had shot our toll collector. They never made it off our property. They were in a vehicle when they did this. And so it's something we've only used once in 25 years. But if the need arises, please know that our staff is trained to use them safely. And it is something that comes with having an iconic structure.
All right, well, I learned a few things today. Thank you very much. Thank you.
Good question.
Good catch. Looking to my colleagues for any other questions, comments, concerns? Jennifer, anything else? Are we done?
Nope, we're done.
Okay, with that, I'll look, is there any public comment on item number 13?
We have no public comment on item 12 or 13, but I'd like to call on this take public comment first before if it's okay to take public comment before the first session.
Good morning. I'd like to see if there's anybody that's joined us that would like to speak this morning under public comment. Please press * to unmute yourself and let me know. I am not hearing anybody. Thank you.
Thank you, Justine. Have no speakers for any of the items or for this committee?
Great. So we did take care of going in. We are going to go into closed session, and I will ask to please lead us into closed session.
Thank you. The committee will now meet in closed session pursuant to Government Code Section 54956.9B1 regarding the 3 matters listed under item 14 on the agenda.
Thank you.
Good morning. Thank you for your patience while we are in closed session this morning, and I'd like to remind you to please keep your own devices on mute. Thanks so much.
All right, we're back in session.
Oh, he is? One sec, guys, we're not quite done yet. So with that, we have no other closed session report. Please, can you provide your closed session report?
Thank you. The committee met in closed session and provided appropriate direction to the attorney on all 3 matters listed under item 14.
Great. With that, look for a motion to adjourn.
So moved.
We have a motion, a second. It's unanimous. And it is, what is that? 10:49. 10:49. Thank you, Bert. So we are adjourned.